All right, we are looking at markets that are really running higher. 30 minutes until the start of trading. I'm Matt Miller.
I'm Sonali Basak.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
All eyes on Donald Trump. The presidential candidate is defiant after an assassination attempt sends shockwaves around the globe.
The Trump trade gaining more momentum as investors boost bets that Donald Trump wins in November.
And more bank earnings roll in. Goldman's profit soars as trading tops estimates. Let's take a look at where these markets are trading right now. At the start of the trading week, you can see we've got a rally on our hands. The S&P 500 up about 0.4% in pre-market trading. A similar story if you take a look at the NASDAQ 100 with big tech powering along. As you see the bond market actually sell off a little bit. Yields currently higher by about 5 basis points on the 10-year yield, Matt.
All right, taking a look at the inversion here, you can see that we're getting a little bit of a disinversion. This is the 2s, 10s, but you see it more less subtly, I should say, in the 2s, 30s, where we actually had a positive steep trade. Here are the odds that Donald Trump wins in blue, the odds that Biden wins in yellow. You can see that Trump has really gained an advantage over the past few days.
And also keeping an eye before the market opens on Goldman shares, Matt, because the stock is up about 0.6% pre-market after the bank's second quarter results beat analyst estimates. Trading surged, but investment banking advisory fees in particular were just a little shy of estimates.
All right, just want to quickly point out before we get into this today that what happened this weekend was horrific. It was historic as well. An assassination attempt like this is something that many of us will not have seen in our lifetimes. One man was killed. 2 others are in critical condition. Corey Comparatori is a firefighter who attended the rally. He died protecting his wife and 2 daughters, reportedly shot in the head as he dove to protect his family. So I don't want to lose sight of that as we discuss the implications politically, economically, and financially.
And for better or worse, that's what you're seeing in the markets this morning. Of course, the consensus being that this really solidifies Trump's chances at recapturing the presidential office. That's what you're seeing in the bond market, and that's what you're seeing in the stock market as well, Sonali.
We certainly are, and across currency markets as well. But let's also talk about the political backdrop for a moment here, because this is all coming as the Republican National Convention kicks off today. Of course, Trump expected to address the audience a little later this week. We will keep an eye on all of that for you throughout the course of the next 2 hours. And we're going to talk more about this because in a rare Oval Office address, President Biden calling for unity ahead of the Republican National Convention.
While we may disagree, we are not enemies. We're neighbors. We're friends, co-workers, citizens, and most importantly, we are fellow Americans. We must stand together. The power to change America should always rest in the hands of the people, not in the hands of would-be assassins.
We're going to now head to Milwaukee, the site of this week's convention, where we can find Bloomberg Balance of Power co-host Joe Mathieu and set the stage for us here on what to expect this week.
Well, as far as this week goes, a lot of questions actually about the direction this entire convention is going to take, Sonali, after the events of this weekend. Donald Trump told an interview just yesterday, the Washington Examiner, that he has rewritten his speech for Thursday night. He said it was going to be a real humdinger, and that's a quote. But he's rewritten the speech to embrace unity, and that's what we've actually been hearing from lawmakers here in our special broadcast last evening. Everyone from Senator Ron Johnson of Wisconsin to Congressman Brian Steil of Wisconsin were calling for the temperature to be brought down. Now, we are expecting some news today on a running mate, which is going to be another layer here to this whole conversation. And there will be some business had today. Delegates are in town, not just to applaud politicians and get together and have steaks and drinks at night, but they're actually going to have roll call votes on the party platform. That's the first time since 2016 that will be happening, as well as entering names in a nomination. And that's why we expect some news on a running mate later on.
Joe, what's the feeling on the ground in Milwaukee? I mean, has security increased? Is there tension in the air?
Security is intense. I've had an opportunity to be at almost a dozen of these things, and it's never been heavier than what we have here. It's not even so much an expanding of a perimeter map, but a hardening of a perimeter. The gates are up. You've got law enforcement from 40 different agencies. We talked to police from all over the state of Wisconsin yesterday and bumped into some from Cleveland. They're here from Chicago, and you've got federal law enforcement everywhere as well. That will ramp up today as the actual events get underway here in the hall with 50,000 people to protect. It's a pretty serious job. You can't drive through downtown Milwaukee right now. Streets are closed. You've got helicopters in the air and airport-style security to get into the building.
All right, Joe, Mathieu, really appreciate that update and looking forward to your coverage all week long. Of course, more of that coming later today. But let's keep this conversation going now on the fallout. We're joined now by Henrietta Treyz. She is Veda Partners Managing Partner and Director of Economic Policy. And we just heard from Joe Mathieu this attempt to bring the temperature down when it comes to the political discourse in this country. And it feels like you are seeing a rare moment of unity right now, Henrietta. But how long does that last?
Right. That is definitely what we're seeing. It's a welcome respite for anybody who's followed politics for the last decade. I imagine it will not hold for very long. I do think that it is a good sign that Nikki Haley will be attending the RNC. She was, of course, not scheduled to be there before, but now is going to show up, which is boosting some speculation about whether or not she might be the vice presidential pick. I think it's worth noting for the investment community that the way for Trump to have outsized wins in this election cycle, for a true wave and not just the statistical one that is geographically coming the Republicans' way based off of what we see in the races for the U.S. Senate, you could see a situation where if a Nikki Haley or a centrist presidential candidate or somebody who sort of tries to reach out to the middle, tries to reach out to a suburban, female, educated, married voter, that's where Trump's lag really is in the electorate. If he's able to overcome that with a unity narrative, and he does come at it with a deficit against President Biden, who pulls 7 points ahead on, protecting democracy, things along those lines. A big part of that is what drove Nikki Haley's primary gains in Indiana just a few weeks back, getting 22% of the vote. So I think a continuation of this unity theme would advance the ability of former President Trump to come in with a pretty sizable majority in the House and Senate next year.
Henrietta, how important is a unity candidate for vice president, and what do some of the other potential picks say about the path forward and what it means for the country and for investors?
Well, I think it could be material. We have a $4.6 trillion tax bill that needs to be written next year. If Republicans are able to come in with, instead of 51 or 52 seats in the U.S. Senate, something like 55, 57 seats in the U.S. Senate, that is the difference between, $2 trillion in deficit reduction increases or $2.7 trillion in deficit increases. It's the difference between seeing the SALT deduction capped at $10,000 again for a $1.2 trillion revenue raiser, or if, we don't have the votes for that and you can't get it through the House. So it is a really big impact, and we're sort of sifting through that now with investors today to really understand what the tax bill would look like next year, because it's a big difference if you have 51 senators from the Republican Party versus 55. You got a lot of votes you can work around if that's the case, and you have a larger majority. It would behoove the former president to come in with as many Republican senators as humanly possible.
And I mean, that's all part of the Trump trade that we're going to be talking about all day today. It is all about, more tax cuts, increased tariffs, even higher than the Biden administration has increased them, and decreased regulation, even more than we've seen, the Supreme Court already achieve in that sense. How strong do you think all three of those legs are?
Well, I think the tax piece has to come first because you must have congressional support for that bill. The president has no authority to write tax law. So that has to go through the House and Senate. As we've seen for the last several years, the House Republican Conference, when it's this small, this razor thin, it is dysfunctional. Every couple of months we work with, is Speaker Johnson going to get fired or not? If the Republicans have, 235 seats in the House of Representatives, all of a sudden the Freedom Caucus is no longer the relevant factor, and you can negotiate from the middle. If you are looking at tariffs, then what you'll be able to do with more Republicans in the U.S. Senate is maybe work around some of the objections from farm state senators, Chuck Grassley and the like. Tariffs, as you point out, would absolutely be, I think, an issue that Trump would not even have to run into. I don't think he will run into it anyway. 83% of Americans think China is our number one threat, and they're happy to see the tariffs go on, even when you explain that tariffs are taxes. It has very broad support challenging them as our number one competitor.
Henrietta, we only have a little bit of time left, but I do want to talk about President Biden. You wrote on July 11th that you're maintaining your 70%, your high 70% odds that Biden will not be on the ballot in November. Has that changed?
It has not changed. I see Kamala Harris as the next replacement. I go a step further than that. I think what we're seeing from Nikki Haley and from all the other Democrats in the wings is that they're trying to keep their powder dry for 2028. The waters of 2024 are just way too murky for any next stage Democratic or Republican candidate to wade into right now. And the polling data, while it continues to show Trump and Biden just 1 or 2 points away from each other, which is shocking, 71% of the electorate is not swayed by the debates. We'll see if they were swayed by the assassination attempt. But Biden needs to get off the ticket if Democrats are going to have a chance to turn out voters with the same level of galvanization that Republicans are currently experiencing.
Henrietta, Treyz of Veda Partners, we thank you so very much for joining us this morning. And remember, Bloomberg Television and Radio will have special coverage on the ground in Milwaukee for the Republican National Convention. Watch it all week, starting at noon Eastern. Keeping an eye on one set of stocks moving higher in the pre-market. We said we would keep an eye on markets for you because a lot is moving under the ground. It's private prison operators and firearm-related companies surging. Pre-market here, more than 7% each on Geo Group and Core Civic. Of course, Smith & Westin as well as Sturm Ruger also moving higher pre-market. For a wider look at the market, though, we are now joined by Victoria Fernandez, Chief Market Strategist at Crossmark Global Investments. And you think about the trade that investors are waking up to this morning, dollar higher, curve steepening, and stocks on a tear, particularly certain sectors. How are you thinking about the geopolitical landscape as it pertains to the market now?
Well, we've definitely seen a shift over the weekend after the events that happened, but I do think we need to take a step back. There's a long time between now and the election, and things can change pretty quickly. So I don't think I would completely change my portfolio based on what we saw over the weekend or the changes that we've seen this morning in the futures market. But it does make you look and say, wait a minute. If we are pricing in a Trump victory, we will have that steepening of the yield curve. We saw it this morning. Back in 2016, we saw that after he won election. We saw financials do better. We saw industrials do better. And so I think those are sectors you can start looking at where you've had pullbacks in the market. Then maybe you go ahead and start adding some of those names into your portfolio and really build out your diversification. But look, we've all been concerned about the breadth of the market as of late. And Friday, we had really strong breadth come in. I mean, we had almost 50% of the constituents in the S&P 500 make 20-day highs. So It looks like the market is doing pretty well right now.
Well, Victoria, a lot of that, the S&P 493 coming back is based on an assumption that the Fed has to cut rates going forward at least once or twice this year. And I note that Jan Hatzius a couple of weeks ago from Goldman Sachs said, if we do get a Trump presidency, the Fed is going to need to raise rates 5 times. 130 basis points was his argument because increased tariffs bring more inflation. What do you think about that concern?
I can see the reasoning on that. I mean, we've seen it already this morning. We saw the long end of the curve move up, 10s move up a few basis points, 30s move up even longer than that because of the inflation component. That's what the long end of the curve reacts to. So that could be a component that we're there. But if you combine that with the belief that you're going to have growth and strong growth, then I think the market will overlook higher rates a little bit at this point in time, and will still lean more towards those risk-on sectors that are doing really well right now. And like you said, that breadth is really increasing. We have to watch and see if the momentum continues. Momentum is belief in a soft landing, Fed cutting rates for right now, and the AI secular trade. Those tailwinds are going to continue for the foreseeable future.
I want to talk about timing here because on the topic of the curve steepener and some of these other Trump trades that have been talked about, you think about what we saw a couple weeks ago coming out of the debate. Of course, the reaction in the market was strong the next day as people coalesced, at least investors, around the idea that Trump would win the presidency. And then those trades fizzled by the time that the week was through. You think about this current episode that we're in. How sustainable is this? I mean, what does the path between now and November look like when it comes to timing some of these Trump trades?
I wish I had an answer for you on that question. I don't know what the timing is going to be on these. And we don't know if this bounce that we're seeing will fade. Probably a lot of it will have to do with what we see coming out of the convention this week, the rhetoric that we see out of there. You guys were talking to a guest previously. If Trump and his campaign can really pull in some of those moderate voters, then I think you'll continue to see some movement here in the market in support of what we would call the Trump trade. If they don't manage to do that, then we could see this reverse pretty quickly. So we never want to time the market, but we want to look at some of those sectors that have high quality names, strong balance sheets, good cash flows. That's where people need to focus right now.
All right, great to get grounded with you, Victoria. Thank you so much for joining us on this day. Victoria Fernandez there of Crossmark Global Investments. Coming up, we're going to take a closer look at the results coming in from Goldman Sachs with Gerard Cassidy, RBC Capital Markets head of U.S. Bank Equity Strategy and Large Cap Banks as well. This is Bloomberg. Now to high interest, a look at what's making headlines around the world. The Secret Service is facing harsh public scrutiny and investigations after the assassination attempt of former President Donald Trump. Since Saturday's shooting at a campaign rally in Butler, Pennsylvania, Trump allies have blasted the agency over its protection of the former president. Security concerns are particularly acute as thousands descend on Milwaukee for the start of the Republican National Convention. BlackRock says the 20-year-old gunman who shot and injured Trump over the weekend was featured briefly in an ad for the money manager. Thomas Matthew Crooks was one of several students who appeared in the background of the 2022 ad and was an unpaid participant. BlackRock says the footage will be made available to authorities and that the ad will be removed from circulation. And it was a mixed bag of earnings for Goldman Sachs. Advisory fees came in below estimates in the second quarter, offsetting a surge in profit as fixed income and equity trading helped drive better than expected results.
And joining us now for more on Goldman Sachs is Gerard Cassidy. He's RBC Capital Markets head of U.S. Bank Equity Strategy and Large Cap Bank Analyst. And you look at this morning's results and you realize perhaps volatility is still very good for Goldman Sachs. How much room does Goldman, Morgan Stanley, the investment banking industry really have to run, Gerard?
Thank you for having me on the program. And I would say that it's really going to be dictated by what happens in the second half of the year in capital markets. And if we have increased volatility, as you just pointed out, Sonali, that it's better for trading. FICC and equity trading do better in volatile markets than they do in stable markets. So if the markets start to pick up in volatility, I think you're going to see both Morgan Stanley and Goldman Sachs, as well as JP Morgan, Bank of America, Merrill, and Citigroup all have better trading results in the second half of the year. But if there's limited volatility, then of course trading results will slow down. And we have to remember, seasonally, the third quarter, calendar third quarter, is always the weakest quarter for trading because of the summer vacation months.
What did you make of this fun fact here in Goldman's results, this idea that they were willing to send compensation costs a little higher here? Are you comfortable with that, given the uncertainty that's in the market for the rest of the year?
You need to see in the capital markets business, particularly investment banking, compensation is extremely important to keep your best, biggest producers. And so when you take a look at their investment banking results, which were strong on a year-over-year basis, you need to make sure you set aside the bonuses that you're going to be paying at the end of the year. And that's what they obviously did with their higher compensation costs this quarter. So it wasn't money is put aside for not producing. The numbers were there for the production. So they want to make sure they take care of their people at the end of the year, especially the people that are producing the revenues.
I want to talk a little bit more specifically about investment banking and specifically the merger advisory fees. For Goldman, that came in at $688 million. That's about $100 million behind what we saw JP Morgan put up. What do you make of that gap? Is that something that Goldman can conceivably close sometime soon?
It is a number that was lower, as you pointed out, than JP Morgan. But we have to remember when it comes to advisory, what happens is these deals are episodic, and then when they close, also is hard to predict. And when you look at the JP Morgan numbers in particular, and you look at the guidance they gave in investment banking in mid-June, they far exceeded that guidance, and it was due to some deals that closed at the end of the quarter, which apparently they were not expecting in the middle of June. So they had very strong numbers. But again, Goldman Sachs is a premier investment advisor for M&A. They have not lost their top shelf ranking, and they will continue to be the premier advisor. And again, it's really the timing of the revenues. It's hard to predict exactly when they fall into the quarter, but looking at it from a calendar year basis, we expect Goldman that, assuming M&A remains robust or picks up, Goldman will be right there winning its fair share.
They tapped John Mahoney to run their firm-wide strategy. He's a banker who's been with Goldman Sachs since 1987. I mean, that's when Paul Sweeney started in banking. What does it mean that they didn't tap some young, rising superstar and instead chose such an experienced hand?
I think experience brings a lot to the table, and that's what certainly Goldman Sachs wants at this point. As you know, they went into the consumer banking businesses over the last 5 years, let's call it, and they've discovered that it was too much of a challenge for them to be competitive, and they're exiting those businesses. So now as they realign their strategic going forward messages, I think what you're going to see is they're going to be very focused on what they do best, which is investment banking, trading, wealth management, and asset management. And as they excel in that, yes, it may be a little more volatile, but under Solomon's leadership, the CEO, they have grown their tangible book value per share and book value per share very effectively under his leadership by returning excess capital. And that's part of the strategy over the long term. And you saw that this quarter with a very sizable buyback that they had this quarter.
All right, Goldman shares perfectly flat in the pre-market. Gerard, Cassidy of RBC Capital Markets, thank you so much. Now coming up, we'll take a look at the companies making the most social buzz today. That's next. This is Bloomberg. All right, it's time now for Social Climbers. Look at the companies making waves on social media this morning. And let's actually just talk about one, and that is Macy's, ending talks with Ark House Management and Brigade Capital Management on their buyout proposal for the department store chain, saying that an increased offer still failed to have compelling value and lacked financial certainty. So the company will embark on a standalone turnaround plan. You can see not a lot of confidence in that in the pre-market from investors. Macy's shares currently down about 15%. Let me read that headline once more. And then Macy's ending its buyout discussions with Ark House and Brigade. This is Bloomberg.
All right, it's 20 seconds until the starting bell. This is Bloomberg Open Interest. I'm Matt Miller. We do see futures higher this morning. Right now, across the indexes, on the S&P 500, you can see futures higher about 0.5%. On the New York Stock Exchange, Bank Creek Capital Advisors ringing the bell because they have a new ETF, BCUS. And then on the NASDAQ, we see Whole Foods ringing the opening bell. A lot of talk today about the effects that we may see in this market from the attempted assassination on Saturday of former President Donald Trump. Will those Trump trade stocks, DJT, for example, but also banks, oil and gas, healthcare stocks, really see a lift on the increased odds that Trump wins the election in November? Katie, what do you see in terms of the broader market? Yeah, at least on the index level, there is a lot of green on the screen behind me. To start this trading week, you can see the S&P 500 currently higher by about 0.4%. The Dow currently leading the way. It doesn't happen too often, but the Dow up about 0.7%. Big tech also holding its own. The NASDAQ 100 up about 0.4%, of course, as trading just gets started. But one stock to watch, of course, is Apple, really rising after sales in India hit a record of almost $8 billion. Apple, of course, wants to challenge Android's dominance in the country, so this is a good sign. And you can see shares currently higher by about 2%, Sonali.
Katie, I'm also keeping an eye on bank stocks. Of course, Goldman reporting a surge in profit as trading tops estimates. Morgan Stanley on deck to report tomorrow. Goldman up about 0.8%. Morgan Stanley actually down about 0.4%. And you've got to watch the trading figures here. Big competition. Goldman coming in above where Morgan Stanley was expected in equities trading, Matt.
All right, and shares of Trump media continue to rise as well. That's the DJT. I was mentioning the chances of another term for the president, former president, really driving that stock higher. Let's get over to Bloomberg's Abigail Doolittle. She has a closer look at the Trump trade we're talking about.
That's right, Matt. The Trump trade really getting a boost today. This, of course, as you were mentioning, after the attempted assassination of Donald Trump. And I would also argue his reaction, defiance, bold, fearless. We have DJT up 43%. This is the best day since it started trading on the NASDAQ. You were mentioning oil, gas, banks, so many different sectors to take a look at them. One of them is healthcare. Humana, the health insurer, up nearly 3%. Of course, he wanted to repeal affordable healthcare in his last term, so we're getting this bid. Bitcoin, the risk on, the certainty. There's now a 40% spread from a betting perspective that Trump will beat Biden, or if you were to look at Kamala Harris, even more so. And then the peso, he, of course, in his last term was not friendly to Mexico, so we have the dollar rising against the peso in a big way. Let's take another way to look at this certainty, though. If we take a look at the VIX curve in the Bloomberg terminal, back here in April, the VIX curve for the month of October rising close to a 20 handle. You can see the whole curve elevated relative to the VIX itself. That's a way of saying that there was fear, volatility, uncertainty around the election. It is still elevated, but now what had been a 20 handle for October is 17. That's also the case for December and January, coming in a little bit more. That is the effect of certainty on the VIX curve, Katie.
All right, Abigail Doolittle, thank you so much for that roundup. And joining us now for a broader conversation, I'm pleased to say we have Scott Chronert. He is Citi U.S. equity strategist here on set with us. It's great to see you in person.
Great being here. Thanks.
So you wrote a note on Friday, basically about Trump's momentum increasing, taking a look at the different policies that could come about in a second Trump term. That, of course, was before the tragic events of this weekend. But when you think about just the market math and the calculus that investors are doing, has anything meaningfully changed between now and Friday?
I think since Friday, no. The answer is we went into the weekend with a presumption that the Trump lead over Biden had increased to a point where you had to factor that in as a most likely outcome. Now, we have to be also aware that the situation can change as news flow evolves from here. And the policy discussions evolve from here. But from now, yeah, we've been presuming that a higher chance of a Trump win.
It's not just a Trump win, though. I mean, the idea that many have been talking about is would-be Republican voters are actually going to go to the polls and they are going to vote for Donald Trump and then Republicans down the line. So you have a much higher chance of a Republican sweep of both houses and the White House. Wouldn't that make a huge difference in terms of policy?
It does, in terms of how you think about a policy implementation. So you're absolutely right. With the Trump victory, we've been presuming a red wave, and so he controls both House and Senate. Senate likely going Republican in either event. Biden, we'd been presuming sort of a split Congress, which means that the agenda is a little bit murkier in terms of what can actually get passed. So I think when you're looking at a Trump playbook, the first place you go is to what did he do in his first term? And we're allowing that, hey, market's seen that playbook before. We've seen a focus on lower taxes. We've seen a focus on deregulation. So some of those aspects will persist this time, but the magnitude in terms of a positive shock effect to equities may not be what it was then.
Well, one big question, too, because you see the magnitude of that equity rally really feeding into the market now, cross-currency moves as well, cross-bond markets. How much conviction do you put into these trades this early in the election cycle?
Well, we have to allow that with ex-President Trump in particular, the narrative can change and he'll shift with where the polls and other inputs tend to take him. And so we have to allow that what we're talking about now may not become reality. An example is back in January, we were first writing about the election and said, gosh, this 10% across the board tariff, that's a pretty big negative. Oh, don't worry, by the time he actually gets to office, it'll be something watered down. And so you're always kind of wondering and watching for incremental information flows that allow you to, potentially change your views. Hasn't happened so far in this case.
Well, it's a great point. And of course, there's a long way to go before the actual election and then before the actual presidency. But let's talk about some of the things that are in the conversation right now. When it comes to the Trump trade, you have banks, drug makers, oil and gas. Obviously, the Steve Kerpener is working its way through the bond market. Are we looking in the right places, though? Are those sort of the trades and the asset classes that should be under scrutiny?
We have a little bit different view on the Trump tariffs. Okay, so let's start with that. And our view is that the Trump tariffs in and of themselves are probably equity negative. Essentially, what it does for us is conjure up memories of the supply chain dislocations that we had coming out of the pandemic. And so on their own, the Trump tariff talk, 10% across the board, in our view, begins to add uncertainty to the fundamental outlook. So that's point number one. Point number two is in terms of the deregulatory push, got that. That makes sense. We've seen some of that playbook before. Where we end up on this is my third point is that we view the banks as probably the cleanest Trump trade, if you will. Valuations for that part of the index are not stretched to begin with, so you've got more shots on goal from a fundamental perspective, steepening curve, as you point to, Katie. And so all told that we think when you add in the potential for some deregulatory relief, the banks jump out at us as sort of an easiest path of resistance, if you will, in terms of playing a Trump win.
What do you think about big tech? I mean, Sonali brought it up in our morning meeting. Deregulation is going to have an effect on them as well. But also, they're a hedge for everything, right? Because it's a safe place to put your money.
Well, so I think the way we're thinking about that, a little bit different. So there's no question that you're seeing some fraying around the edges in the broader economic situation. We know that, we're getting closer to a Fed pivot point, which is something that we've all been talking about for some time now. So when you think about big tech, we use this notion of growth being defensive, and I think that's where we are with this. As you go down this path of potential, change in Fed direction, ongoing economic uncertainty as we're seeing the labor markets come off and so forth, big tech becomes a safe haven in that regard because there's more comfort in fundamentals, and the valuation support you get from a Fed pivot support that. So a lot of times we look at this, the recession discussion, which is City House view, and you ask yourself the question, how are you going to navigate across that economic valley? And growth being defensive, which plays a big tech, is usually one way of thinking about that.
That is Scott Chronert of Citigroup. He's sticking with us. Before we go to break, I do want to bring you some updates from Goldman Sachs' earnings call this morning. Of course, kicking off the call, speaking to the events over the weekend, saying it is a sad moment for our country and urges people to treat one another with civility. He says that he hopes this will spur reflection and action. Of course, now also getting started with analysts. Speaking to Goldman's own results this morning, Goldman shares actually rising almost 2% into the market open, more than 2%. Of course, really profiting from the volatility in markets as they come, saying that they have a very strong backlog there in investment banking. We will get you more as we have it. Coming up, the analyst action that you need to know this morning, that's up next in our top calls. Stick with us. This is Bloomberg.
This is Bloomberg Open Interest. Let's get a quick check at what's going on in the markets. First off, S&P 500 up about 0.5% right now. So big gains really across the board, helping to drive that index higher. You do see the 30-year yield right now up almost 5 basis points. This is interesting because the 2-year yield is coming down right now. And at one point, we saw 120 basis points of inversion between these two, and it's back to zero right now on the Trump trade. Bitcoin also a piece of the Trump trade. If you look at Bitcoin since Friday, it's actually up more than 10% on optimism that a Trump administration would be friendlier to crypto. Katie?
All right, it's time now for some of our top calls. Some of the analyst action that's in focus this morning. And first up, Oppenheimer removing Ulta Beauty from its top picks. The analysts say that the retailer's, quote, aggressive promotions suggest ongoing challenges and cites potential risks to its guidance. Next up, we have Citi downgrading Electronic Arts to a neutral. The analyst sees limited upside for the video game company following recent gains. And finally, Morgan Stanley naming Apple as a top pick. The analyst saying that the tech giant's artificial intelligence platform can spur a multi-year refresh cycle. And Apple was also upgraded at Loop Capital Markets. And Sonali, we heard something similar from Steve Eisman last week, actually.
We sure did. And to talk more about Apple, the banks, and the rest of the stock market, Scott Chronert, Citigroup U.S. equity strategist, still with us this morning. And of course, we were talking about the political ramifications for stocks, but also we're knee deep in the start of earnings season. You saw some promising results out from Goldman this morning, but you didn't see promising results so far from a lot of the companies that we've seen. How much risk is there in this season?
I think the risk is that we get, we'll call it beat and hold, where we see a very persistent positive surprise dynamic with the Q2 reporting period. We're completely expecting this, but we're also expecting, as a function of that macro environment softening a little bit over the past couple of months, that most C-suites will be sort of, let's say cautionary or glass half empty in terms of their commentary. So what this means is good earnings results, a little bit less follow through in terms of an upward revision bias to the numbers. And so we just have to be attentive that that's going on in the background while we're getting closer and closer to this mythical Fed pivot point.
In terms of earnings, right, we have been touting the 3 quarters in a row of earnings expansion. But of course, that's only like, 10 or 20 companies that have been growing earnings. Right. The rest have been in an earnings recession for like a year and a half now. Are we coming out of that this quarter? And are you going to see the other 493 companies on the S&P 500 start to increase profits and increase outlooks?
That's the setup. Okay, we've been talking about this. It's for going on a year now, as it turns out. If you go back and look, you've had earnings recessions flow through growth and then cyclicals and defensives since the middle part of 22. So we're completely on board that from an earnings progression perspective, we're leaving 2 flattish years of S&P earnings growth behind. 23, even though the other 493 doesn't look like it's keeping track with tech, you're still on path to grow 6% this year, which is a market acceleration. We think that it picks up going into 2025. Essentially, what happens is that you get more and more sectors moving to a positive growth dynamic, which is different than what we had in 2023.
Is that enough, though, to ignite that sort of broadening out when it comes to the stock market performance? Because 6% growth, I mean, it sounds pretty good, but I feel like we've been spoiled by the types of numbers that big tech puts up.
So I think what we have to think about is, I'm going to kind of use the phrase leadership versus broadening. A lot of people want to say, well, gee, what about equal weight S&P? Isn't that how I should play a broadening? I think it's the wrong way to think about that. Well, we have to acknowledge and presume that mega cap growth is providing a fundamental and price performance leadership, but other sectors become very important in helping the index actually begin to or continue to hit new highs. So the actual broadening, if you will, is other sectors now contributing to aggregate index performance. And I think that's actually an implicit positive. It's part of how you begin lifting your S&P 500 targets.
Well, let's get specific and talk about some of those sectors, because I talked to a lot of people, a lot of heartbroken bulls who have been waiting for such as energy, healthcare, et cetera, to sort of pick up the slack here. But which sectors, which industries actually have the potential to follow through on that?
So what we're doing, the way we've been aligning this, Katie, and we started to play this going into Q2, and now we're reaffirming it going into Q3, is, okay, we get it. Mega cap growth is sort of has important fundamental drivers. We want to be holders of that part of the market, right? So we're all in on that trade. But where you want to be putting new money to work is down those areas of the market that should be a beneficiary of an inflecting Fed. So that's consumer discretionary more broadly. That's financials more broadly. We even took real estate to an overweight as a way to express this. So we're trying to pivot away from traditional economic sensitivity, where we have some economic frame to contend with, down a path to let's participate in those areas that should be a more direct beneficiary of lower Fed funds rates.
You know, it's interesting. We were talking about the banks, bringing us some more headlines from Goldman's earnings call. They plan to moderate the pace of share buybacks. Now, of course, we know, yes, that is a hard thing for investors. Capital return is the big story. Goldman or otherwise, if you look across the equity market, how important is it for companies right now to commit to that extra dividend, to their share buybacks at this point in time?
The big picture here is that we talk about earnings, right? Free cash flow is poised to inflect this year, and we think for the S&P grow 10% this year, and probably the same, if not more, next year. So with free cash flow generation comes a lot of what we call financial flexibility. And so we have to allow that within that framework. There's room for any combination of repurchase, which is obviously something investors are looking for, dividend growth, CapEx expenditures, and even debt pay down. So what we're suggesting here is the underlying financial flexibility behind improving free cash is positive in many ways. It doesn't just have to be share repurchase.
Yeah, well, we'll see, of course. It feels like dividends were the story of last earnings season. Maybe that will follow through this one as well.
Maybe they need to invest in AI. You know?
Yeah, that increase the CapEx there. Scott, it's always great to see you. Really appreciate you taking the time. That, of course, is Scott Chronert of Citi. Now, coming up, Goldman's advisory fees missed, but trading soars. We're going to dig into those results and more in our Wall Street Beat next. This is Bloomberg.
It is a sad moment for our country. There is no place in our politics for violence. I urge people to come together and to treat one another with respect, civility, dignity, especially when we disagree. We cannot afford division and distrust to get the better of us. I truly hope this is a moment that will spur reflection and action that celebrate what unites us as citizens and as a society.
That was Goldman Sachs CEO David Solomon speaking moments ago on the bank's earnings call, and Goldman tops today's Wall Street Beat. A mixed bag for earnings over at Goldman Sachs. Advisory fees coming in below estimates in the second quarter, offsetting a surge in profit as fixed income trading and equity trading helped drive better than expected results. And if you look at Goldman's earnings, of course, shares rising into the market right now. They did say they would moderate buybacks, as we had discussed, but also this interesting thing. Remember, with advisory fees, coming in below estimates, you have to believe in that second half rebound in deals, guys.
Which may be tough, right? If deals flow is hampered by a presidential election, we're not going to get back to the kind of numbers that we've seen in previous years around this volatile event.
Right. I mean, a lot of this depends on the actual environment. There's not a ton that Goldman can do about that. But it was interesting speaking to Gerard Cassidy just a little bit ago and him saying that, I mean, Goldman is still first in class, basically saying that this is kind of a blip.
They're number one. Listen, they're number one on league tables, and I've got to say, in equities trading, they came in above J.P. Morgan, and they're slated to come in above Morgan Stanley. Of course, Morgan Stanley is the long-standing kind of hero in that business. But, there's another stock we are watching. That is BlackRock, hauling in $51 billion of client cash to its long-term investment funds in the second quarter, pushing the world's largest money manager to a record $10.6 trillion of assets. Wow. And as Eric Balchunas points out this morning, that much money gives it more AUM than Fidelity, Cap Group, Invesco, and Franklin combined. Yeah. Yet you are seeing the stock under pressure this morning.
Yeah, I mean, they're just a behemoth. I don't know about the stock reaction. It feels like we see a similar thing with the big banks posting up these huge numbers and then a disappointment. I will say, I mean, BlackRock is so dominant when it comes to mutual funds, when it comes to ETFs. Interesting to couch this in this push that they're making into private assets. I mean, we've seen them make acquisitions to that effect when it comes to global infrastructure partners. When it comes to Preqin and this real push to basically index the private markets, you have to think when you're BlackRock and you're trying to expand, that's a natural place.
You also have to keep in mind that although a lot of people on the left are angry with BlackRock for investing in, for example, gun makers, people on the right are not huge fans of BlackRock and Larry Fink. So after the events that we saw this weekend and the fact that BlackRock said the shooter was in one of our commercials, it's not a huge shock to see his stock down a little bit.
And we do have some breaking news, actually, when it comes to the political sphere and President Donald Trump, former President Donald Trump. The Trump judge dismissing that Florida classified documents case, the judge finding the special counsel appointment unconstitutional. I'll read that one more time, that the judge in that Trump case dismisses the Florida classified documents case. So, again, it really speaks to the moment that we're in. This is a very highly political time, a lot of political news coming through. And, of course, Donald Trump is a candidate that has a lot of legal issues ahead of him still. Sean.
You know, it's really interesting. I found myself wondering after I heard from President Biden that he called Donald Trump, and then we saw that Oval Office address, if he doesn't pardon the former president, in an effort to bring the country together, right? Everyone's now talking about unity instead of attacking each other the way they were on that debate stage. And, you know, this is one of those cases that Trump has to look forward to falling away.
And you have to wonder how much that unity ticket really matters going into November.
All right, fascinating headlines. Just to reiterate that, the judge in Trump's Florida case, that's the classified documents case, has dismissed it, citing an unconstitutional, what that judge calls an unconstitutional appointment of a special counsel there. I want to give you the trading diary, what you need to be watching this week. Bloomberg has special coverage on the ground in Milwaukee for the Republican National Convention, and you can bet they're going to be talking a lot about this dismissal there. Fed Chair Jay Powell is going to be speaking to Bloomberg's David Rubenstein at noon today. We'll bring you that live as it happens. You can also watch it on the terminal, TLIV Go. And then bank earnings continue tomorrow. Morgan Stanley and Bank America are next up in terms of reporting after Goldman Sachs today. U.S. retail sales are also due tomorrow. And on Thursday, we'll get the European Central Bank decision. Coming up this hour, or in the next hour, I should say, Chris Marangi, Gabelli Funds co-chief investment officer, joins us, how he's setting up his trades going into the election. This is Bloomberg. We are 30 minutes into the trading day. Welcome to Bloomberg Open Interest. I'm Matt Miller.
I'm Sonali Basak.
And I'm Katie Greifeld.
All eyes on Donald Trump. The presidential candidate is defiant after an assassination attempt sends shockwaves around the globe.
And as a result, the Trump trade gains more momentum. Investors boosting bets that Trump will win in November.
And of course, earnings continuing to roll in. Goldman's profit soars as trading tops estimates. Let's get a check on these markets right now. You can see that the S&P 500 firmly higher in today's session. The S&P 500 up by about 0.4%. Big tech leading the way, though. The Nasdaq 100 up about 0.5%. I'm going to call that 0.5%. Meanwhile, it seems like the bond market is where all the action is once again. That 10-year yield, the long end of the curve, selling off. The 10-year yield currently higher by about 4 basis points, Matt.
All right, we're watching all these assets closely, but a breaking story here, really, I think, fascinating considering what we've seen over the last 48 hours. A federal judge has dismissed the criminal case against Donald Trump, accusing him of mishandling classified documents, finding that the appointment of special counsel Jack Smith was unconstitutional. Let's head to Milwaukee right now, the site of this week's Republican National Convention, where we find Bloomberg Balance of Power co-host Joe Mathieu. And I think just absolutely fascinating, Joe, especially considering the timing that we see this, one of the big cases that the Biden administration really wanted to use to attack Donald Trump being dismissed.
Yeah, Matt, this is an incredible moment to see these headlines cross the terminal. This was supposed to be the slam dunk case, according to a lot of the legal minds who looked at the 4 cases against Donald Trump. But of course, we knew that this was not going to come until after the election, and it's one that had slowed down quite a bit here. But you're right, the timing on this first day of the Republican National Convention following the events of this past weekend, but also a string of legal victories for Donald Trump, considering the Supreme Court's immunity ruling, the delay of his sentencing in the New York trial, even though he was, of course, found guilty on those 34 counts, didn't make a dent in his polling, Matt, and it's remarkable to have another layer of good news for the former president.
And Joe, just to talk about the timing a little bit more, of course, at the start of the RNC, we know that a lot has changed in terms of the security measures, et cetera, after what we saw on Saturday evening. But to get this headline, which of course is a win for Donald Trump, how could that impact the tone?
Well, it's a good question. There's been a lot of talk about a more unified tone, lowering the temperature. That's what a lot of lawmakers have been discussing with us here on Bloomberg TV and radio over the past couple of days. But it's going to come down to the former president largely. He told an interview of the Washington Examiner that he's rewritten his speech for Thursday night. Something he said would have been a humdinger, but is now more conciliatory in tone, calling for the country to unify. A lot of this will also hinge off his naming of a vice presidential candidate, a running mate. We expect that to happen as soon as today. There are a lot of different pieces of this puzzle that we have to put together, including the next public appearance for Donald Trump. We still haven't heard much from him since Saturday, and he is expected at some point to appear at this convention on day one.
Bloomberg's Joe Mathieu, we thank you so very much for your time, for all of your coverage. And remember, Bloomberg Television and Radio will have special coverage on the ground in Milwaukee for the Republican National Convention. Watch all week starting at noon Eastern. And this week, Donald Trump will announce his running mate. And here is how this weekend's events changes that calculus, according to Raymond James's Ed Mills.
Silver lining that Biden was trying to give to the party was when you look at likely voters, that's where Joe Biden has been the strongest. And now the likely voters are surging in the direction of Donald Trump. And so I think for that conversation is, if I know that my base is going to show up, do I need to pick a J.D. Vance to make sure my base is there? Or do I pivot to a Marco Rubio trying to get a different demographic?
Let's continue this conversation with Eurasia Group Managing Director John Lieber. He says Trump has clearly consolidated the Republican base and Biden is unlikely to step aside. And, John, you know, it's interesting the way things have, in a way, fallen into place for Donald Trump. Of course, what happened over the weekend was tragic, and we can't forget that someone died there, but it adds to his advantage after a horrible debate by President Biden. And then Biden, in almost a Trumpian way, refusing to step aside. Then Saturday, and now this dismissal of the classified documents case in Florida. How strong is Trump? How strong are Republicans right now?
Yeah, man, I mean, Trump's on a roll, and this is the kind of momentum you want going into your convention. You know, there's very little evidence the convention in the past have led to any kind of meaningful bounce for any candidate. Even the most successful conventions like Hillary and Clinton's in 2016 really didn't do much to help her campaign long term. But right now, things are just breaking Trump's way. He's got the Democratic opposition kind of falling apart with Biden's refusal to step aside and the obvious signs of age-related decline that were even on display in his Oval Office address last night, which was the most kind of controlled environment that he could ask for. And he still stumbled on words and had the effect of reminding folks that he is pretty old. So, you know, Trump's in a good spot. He's consolidating the Republican Party. He's ahead in the polls. And, you know, but I would caution there's still 3.5 months of campaigning left to do here. So a lot of stuff can change. And this has already been a very event-packed election cycle.
John, if you think about that as well, yes, there's a lot of time left, but the more that momentum increases around Donald Trump, there's a lot of question around what this would mean about a potential red sweep. What does this mean for Congress?
Yeah, I think the stronger Trump does, the better off he's going to be in Congress. So if Trump wins, you know, the Republicans are taking the Senate. There's almost no scenario where they lose the West Virginia Senate seat and another seat, which would put them below 50 seats. So they're definitely going to have the Senate if Trump wins. And in the House, what happens is that the winner of the presidential election typically has coattails that are strong enough to bring along anywhere from 10 to several dozen seats. So I think really the question that's going to be on investors' minds over the next several months is how big is that red wave? A small majority in the House would make it tough for Trump to do anything legislatively. A much larger majority means that it supersizes his agenda on energy policy, immigration, and probably fiscal as well.
Well, John, I want to go back to what you were saying about there's still a long time until the election, of course, 3.5 months. You think about Biden's response to what we saw on Saturday, really trying to rise above the fray here and basically preach that we need to lower the temperature. I mean, is there anything that Biden can do to maybe capitalize on this moment and reinvigorate his campaign? Or is that role that Trump on that you just mentioned really just going to make that an afterthought?
Well, the problem with Biden lowering the temperature in this campaign is that his entire premise of re-election was based on the fact that his opponent is unfit for office and a threat to democracy. So it's going to be impossible for Biden to both lower the temperature and continue to level these attacks that try to delegitimize a second Trump administration. You just can't do it. Those are two completely inconsistent things. Biden has been unable to run on what's been a pretty good record of accomplishment because voters are just kind of tuned out and don't believe him. And so the attacks have been really central to what Biden says is the reason he should be given a second term. It's because I'm not Donald Trump. And he can't continue to make that argument while also saying, you know what, guys, we're all friends here. So I think he's in a really difficult spot, and they're going to have a very difficult time getting out from this hole.
John, last week we had Steve Eisman from The Big Short with the Neuberger Berman on the program. Listen to what he had to say about the election.
100% certainty Donald Trump wins.
Interesting.
Really?
100%.
Is that investable, though? What do you do?
Well, let's talk about why.
Yes.
So forget about, whether Biden's going to run. It doesn't matter at this point to me whether Biden drops out or does not drop out.
So he went on to say he thinks that the Chicago convention, the Democrats' convention, is going to be so bad with all the protesters that we saw on college campuses unhappy about the Israeli invasion into Gaza, that it's going to push Americans away from the Democrats. What do you think about that? Because Chicago has historically been a tough place to hold a convention.
Yeah, I think that the Chicago convention is going to have so many miles of concrete barricades preventing protesters from getting anywhere close to the convention center that, there's going to be really two different worlds happening there. And there may be loud protests that get on TV the way they did in the spring on college campuses. Not great for Democrats. I love the conviction here. Look, I love 100% calls. I don't like to make them. Who knows what's going to happen. The fact of the matter is, though, at least according to the polls, this is still a close race. If you look at the 6 swing states and the 3 most important states, which remain Pennsylvania, Wisconsin, and Michigan, Trump's lead there is between 2 and 3 points. So well within a margin of error. And there's still a lot we don't know. So I'm not, I agree Trump is the favorite in this race. And I'd even say he's a strong favorite. But according to public opinion polling, it's still close. And there's a lot of time left on the clock here.
A lot of time left on the clock. It'll be fascinating to see how it evolves. Really appreciate your time this Monday morning. Our thanks, of course, to Eurasia Group Managing Director John Lieber. Let's turn to these markets now and bring in Chris Marangi. He is Co-Chief Investment Officer over at Gabelli Funds. And following up on our last conversation, the odds of a red sweep, of course, really increasing, at least in the eyes of the market. What's the playbook there, Chris?
Yeah, so the market is viewing this a Trump win positively. We can have a debate as to whether that's appropriate or not. But, I think it comes down to muscle memory. Obviously, the market, we remember what happened in 2016, the overnight sell-off, followed by a sharp rally and a pretty strong equity market performance until COVID. Trump is going to be deregulatory. He's probably going to be friendlier on taxes. The wild cards are what he does on tariffs and what his fiscal policy entails for the inflation environment. So, starting point's different, obviously, than 2016, but for the moment, the market, I think, is looking forward to a Trump administration.
It's interesting, Chris, when you look at the market and the conviction that there are around those certain Trump trades, less regulation, lower taxes, higher tariffs. I mean, there is still a question on how much of this, even under a Trump administration, this would come to fruition. I would say even over the weekend, I spoke to some people close to the Trump economic advisory teams, if you will, and tax cuts in particular cannot be a sure thing given where we stand with the deficit. How much uncertainty is there around some of these trades going on right now?
Yeah, it's a little ironic that we have 2 very known quantities in this race, a sitting president and a former president. So you think we'd have a little bit more certainty about what those policies might be, but really it's very unpredictable. And Trump had a habit in his first administration of changing course, sometimes responding to the market. And I think there is some expectation that will continue. But, obviously, presidents sometimes behave differently in their second terms when they don't have to get reelected. I'd also mention, by the way, and I think your last guest made this point, we still have to run this election. And the recent elections in Mexico, France, the UK, elsewhere, I think have been reminders that even expected outcomes aren't necessarily fully priced into the market until they actually count the votes.
We still have the Mag 7 front and center, right? This has been an incredibly concentrated bull market, even if you see fits and starts of a broadening. At what point do you say, I'm going to sell NVIDIA and use those profits to buy the companies that haven't caught up yet?
Yeah, so we have had these fits and starts. Obviously, the story of the last several years has been the dominance of these very large companies. Forget about the Mag 7, forget about the top 10. Which have accounted for 60% of the S&P's return this year. Talk about the top 3, Apple, Microsoft, and NVIDIA, each with over $3 trillion market cap. They combined are about 10% of the global equity market. Huge sway, obviously, and for good reason. These are viewed as safe havens. They've got fortress balance sheets. They've got good cash flowing businesses and secular tailwinds, particularly in the form of AI. And those aren't going to change, I don't think, anytime soon. But the world has changed. How does the market respond in an environment of lower rates and of greater political certainty? And I think that's why you're starting to see a broadening in the market. And I think ultimately that's healthy. I'm not saying it's time to go sell those big names because they're probably forever holes. But we're finding value elsewhere.
All right, Chris, thanks so much for joining us. Chris Marangi there from Gabelli Funds. Great talk to you. I hope we can get you back on the program as soon as possible because there's a lot of ground that we didn't cover. I want to get a look at the stocks moving this hour. For that, we go to Abigail Doolittle. Abby?
Well, naturally, let's start off with the Trump trade and the poster boy for it, DJT. Shares are up about 37%. This is the best day going back to since when the stock started trading on the NASDAQ. And of course, this is the idea that there's more certainty, confidence that the former president will be reelected after that assassination attempt and his bold reaction to it. Let's then take a look at Apple, because this, too, I would argue, is a Trump trade gain. It is up 1.8% at this point. Apple is one of the highest tax companies in the world on an absolute basis. And, of course, the 2017 Tax Act expires next year. Democrats want to raise the rate to 28%. Republicans may be arguing for 15%. But if nothing is done, it could go back to 35%. So if there's more certainty around President Trump, former President Trump going back into office, that would certainly help the likes of Apple, Microsoft, Berkshire Hathaway, and many others. And then finally, earnings. Goldman Sachs has kind of been all over the map right now, up about 0.9%. In the pre-market, flat to the results, basically a beat. Had been up as much as 2%, but across the board, really pretty strong. Although their M&A fees just a little bit less than J.P. Morgan, and then the wealth business maybe a little bit light. Sonali, of course, has been hitting on that. And then Blackstone, a record $10.6 trillion in assets, but some analysts saying flows just a little bit light, Matt.
Got it. BlackRock.
Or BlackRock, yes.
Yeah, no, it's a problem that I have a lot as well.
It's the same thing, actually.
It's exactly rocks and stones. Yeah, one of them should change. And I feel like BlackRock now, with over 10 trillion in assets, they have the rights to that name.
Yeah,
so maybe Schwartzman
disagree.
needs to do something about that. Abigail Doolittle, thanks very much for that. By the way, we got Chris Marangi back already. He's going to join us on the other side of this break. So we want to talk to him about media, and I'm excited he could stay with us. We're going to turn to the big banks as well. Obviously, Goldman Sachs kicking off a busy week in earnings with a surge in profits, and Sonali is all over that. This is Bloomberg.
On the one hand, there's a high level of geopolitical instability. Elections across the globe could have significant implications for forward policy, and inflation has proven to be stickier than many had anticipated. On the other hand, the environment in the U.S. remains relatively constructive. Markets continue to forecast a soft landing as the expected economic growth trajectory improves and equity markets remain near all-time highs.
And that, of course, is David Solomon speaking on Goldman Sachs' earnings call in the last hour. Goldman shares currently at an intraday record. Let's welcome back in Chris Marangi of Gabelli Funds. I actually want to talk about what's going on with Paramount and Skydance, of course. Mario Gabelli filing a books and records request in Delaware when it comes to that deal. So I'm curious, what are the firm's concerns about the Paramount deal, and what are you hoping to gain in that books and records request?
Yeah, so what we're calling Operation Fishbowl is a desire to find out what various shareholders are getting paid. We, on behalf of our clients, own about 5 million of the 9 million or so voting shares of Paramount that are outstanding. So a majority of the minority or thereabouts. And, as part of this deal, Skydance is acquiring an entity known as National Amusements. That's been the Redstone's control vehicle, and National Amusements is the entity that owns the voting stock, some non-voting stock, as well as a group of theaters, and they're getting a price of $2.4 billion for that. And so our question is, what is the implied price for the A shares that National Amusements owns? Because under Delaware law, we think that we're entitled to that same price for those A shares as National Amusements received. So anyway, we're just looking for information. We'll see what happens. We don't, it seems, have the ability to block this deal, but it is subject to a go shop, and so we look forward to other people kicking the tires.
Well, I appreciate the clarity there, especially when it comes to some of the valuation. But I am curious just on the fundamentals of this deal, that marriage between Skydance and Paramount. Do you think that this is a combination that makes sense for the long term?
Well, obviously, the media industry has been in a state of upheaval and transition for several years now. We're all familiar with this, even personally, if you've subscribed to too many streaming services. There's got to be consolidation. We think there will be a reaggregation of streaming services, but it really starts with content and the content engines that are still controlled by some old legacy companies like Warner Brothers, like Paramount. Probably need some additional focus, and Skydance brings that. They also bring a tech-forward attitude, which is something we can appreciate. And this is likely, if Skydance is able to close this deal, going to be a medium to long-term home for these assets. But ultimately, other pieces could come off, and you could see additional consolidation.
Speaking of additional consolidation, you recently had Barry Diller hinting that he's still interested in Paramount Global. I mean, if you think about just what you had been saying about Skydance being a good partner in terms of content, I mean, is Barry Diller a better one?
I'm not sure what Barry's game is. Obviously, he knows this asset quite well. He was the youngest studio chief at Paramount many, many years ago. There are, I think, additional ways to surface value here, including the very valuable CBS television network and their station group, which probably, if they were separated, would be worth considerably more than where they're being valued in this deal. There are obviously some regulatory constraints on who can own those, but that can all be worked around, especially with partnerships. And that's sort of the kind of deal talk that you've been hearing from others, including Edgar Bronfman and a few private equity firms.
Well, what do you think, Chris? I mean, you're an expert in this area of media, and we're talking so much about the stronger potential now of a Trump win in November and possibly even a red wave. How does that affect the media landscape?
Well, it's a very interesting question because, almost certainly, as we talked about earlier, Trump will be deregulatory. He'd probably be friendlier to M&A. The bar is fairly low, given what's happened in the Biden administration, with the possible exception of what happens in media. The fourth estate, it's got a special place in our society. It's been a big focus for the Trump administration. So not exactly clear how he'd view media consolidation, probably friendlier. But again, it's a bit of a question mark. But the economics of the business are going to probably drive at least attempts at putting some companies together.
Chris, we have to leave it there. That is Chris Marangi, Co-Chief Investment Officer at Gabelli Funds. And of course, consolidation being a huge story in this equity market of late. And still ahead, we're going to get a look at the state of leisure and travel with Alex Wilcox, the CEO of semi-private airline JSX, next. This is Bloomberg.
Let's get now to high interest, a look at what's making headlines around the world. BlackRock says the 20-year-old gunman who shot and injured Donald Trump over the weekend was featured briefly in an ad for the money manager. Thomas Matthew Crooks was one of several students who appeared in the background of the 2022 ad and was unpaid. BlackRock says the footage will be made available to authorities and that the ad will be removed from circulation. Billionaire hedge fund manager Bill Ackman and Tesla CEO Elon Musk are both endorsing the presumptive GOP nominee Donald Trump. The endorsements came minutes after Saturday's failed assassination attempt on the former president in Pennsylvania. And Macy's has ended talks with Arkhouse and Brigade on their buyout proposal for the department store chain, saying that an increased offer still failed to have compelling value and lacked financial certainty. And thus, Macy's shares are down 15%. Coming up, travel and leisure leaders JSX named the best domestic airline of 2024. The results of the 2024 Travel and Leisure World's Best Awards are in, and there is a new winner for the best U.S. airline. JSX, the semi-private chartered service, was voted to the top spot. The Hop-On Jet service serves 48 routes across the U.S. and Mexico. And joining us now is Alex Wilcox, the CEO of JSX. Alex, great to have you on the program. Congratulations, obviously, on the award. It's not the biggest airline, right? So it's interesting that they chose you for this. What are the major markets that you serve?
Well, Matt, great to be with you this morning. And thanks for pointing out that we've just been rated the top airline in North America. We are definitely not the biggest, but we are clearly the best by a margin of about 20 points if you looked at those numbers. We fly across the U.S., but we fly New York to Florida, for example. From a couple markets, we fly from Morristown, New Jersey, from Westchester County, We fly to Opa-locka, which is an alternate airport in Miami. This fall, we'll be adding Boca Raton, and we'll be adding Palm Beach and Naples, Florida. Will be the only scheduled service in Naples, Florida. In fact, half of our markets don't have commercial service at all. We're the only way you can get to and from those places. We also fly on the West Coast. Our biggest operation is actually in Las Vegas. And we fly all over California and then also to Scottsdale, Arizona. And we've got some international flying down to Cabo San Lucas as well. JSX.com, you can see our route map there.
You know, I'm interested also because you're saying that you don't fly to places where there's a lot of commercial access as well. What does this mean for you in terms of pricing power? What's your average flight cost these days?
Well, our yield is really good, well above the industry averages. Around $1 a mile is what we're averaging. So if you buy a ticket for a flight that's 300 miles, it'd be about $300 each way. And that's a pretty good guideline for our entire network on terms of average. But we have a lot of lower fares too. Our fares start at just $249 each way. They do go up to $800 or $900. You know, if you're going to be on a peak flight on a weekend, say going on a Friday from New York to South Florida, or from Los Angeles to Las Vegas. So the range of fares is large, but the average is about $1 a mile. And there is some pricing power, but people do have their limits, and they will shop the market, and there are alternative points available. But the difference between us is that you're not comparing it to, the first class on a major carrier. You're actually comparing it to the price of a private jet, because that's the only other way to get there.
And it's interesting, one of our producers just put in our chat that looking at the Westchester to West Palm flight, that looks like it's fully booked. Can't get a ticket till the end of November. But even still, I'm going to ask this next question, which is Delta. Of course, we got some disappointing earnings from them last week, I believe, a disappointing outlook. And you've really seen some of these larger airlines discount to make up for maybe less robust summer demand than they had been expecting. Does that threaten to pull business away from JSX?
I don't think so. I think, our customer is not shopping for price or shopping for convenience. I think Delta, look, they missed a little bit, but they're still making money. Which you can't say about these other two Dallas-based airlines who are spending their time trying to put JSX out of business instead of focusing on their own customers. So, I think that there's a lot of opportunity for JSX, and we really compete more with the first-class customer and more with private jets than we do with a cheap ticket from a major market to another major market. So, I really admire Delta. They're focused on customers, and I think that's what all the airlines ought to do.
And I definitely hear what you're saying about convenience. I mean, you think about that route I just mentioned, Morristown to West Palm. You go into Morristown, it's a private airport. You don't have to go through TSA screening. You save a lot of time there. But then you think about the Federal Aviation Administration planning to impose tougher safety requirements on public charter airlines, such as JSX, of course. And what would that mean for your business? I mean, if you had to go to regular airport terminals, use the TSA screening lines, it feels like that would take out some of that convenience that is your strong suit.
Yeah, Katie, our security program, just to point that out, is actually TSA approved, and there is security. It's not done by the TSA as it is in the major airports. You don't have to wait for those long lines, but there absolutely is a very, very secure layer of security. And I would put it up against any major airline security program. By the way, because we're, small is beautiful when it comes to security. There's only 30 people on the airplane. It's very easy to keep track of. As far as the FAA's action, I think that they're really just responding to a lot of political pressure from American Airlines and Southwest Airlines. American's not going to make money this year. Southwest Airlines has well-documented challenges from Elliott Management. If I were running those companies, I wouldn't waste my time obsessing over a tiny competitor. I would do what we do here at JSX and focus on my customer. As far as, what the FAA is actually proposing to do, there is no demonstrated difference in safety levels between JSX and any major carrier. I'd put our record up against any of them any day of the week. What's happening here is purely political. We have the highest interest in safety, higher than anybody else. And I think that, the FAA can't staff air traffic control. Boeing can't deliver airplanes. There's near misses reported every single day. If the FAA is going to be concerned about something, maybe they ought to look at those things before actually trying to take pot shots at the #1 rated air carrier in North America.
Alex, I wonder about the websites that a lot of people use to search for flights, Expedia or eBookers or Kayak or Travel Worm or whatever. This is what my wife relies on to book all of our travel. And I'm looking for JSX here. You don't pop up, obviously, as much as Delta, American, United. Are you involved in these search engines? Do you want to be? How does that work out for you?
Yeah, we are. That's a great question, Matt. You know, distribution is the name of the game in this business, and we do show up in Google Flights in most of our markets. And we show up in two ways. Some of it is directly sold by JSX, and some of it is sold through a code share agreement with JetBlue. So, for example, if we have a flight, then JetBlue will put their code on it. So if you find a JetBlue flight, say from Concord in the East Bay of California, of San Francisco, down to Burbank, you will find that flight listed, through JSX and through JetBlue. The reason we're not showing up probably has more to do with the fare level, because it's obviously sorted. The default sortation is by fare, and so our fares are a little bit higher. So you have to go to page 2 or page 3 to find us probably. The other reason is that no one ever searches Concord to Burbank. They search San Francisco to LA.
I'm interested, Alex, in this kind of broader narrative that's been going on in the airline industry. Of course, you mentioned your relationship, a partnership with JetBlue. But what do you think in terms of consolidation possible for JSX in the future? Do you see yourself as a standalone carrier, or do you think that you could merge?
Katie, I think what we do is really, really unique. And I think that if a major carrier were to acquire us, we would just become a distraction. We'd eventually probably go away, fade away, because we're a tiny business. We'll be $1 billion in a couple of years. But if you're a United or another major airline, that's kind of a rounding error. So I think the United and JetBlue are both shareholders at JSX, and I think that they like to learn from us and they like to see what we're doing and pay attention to it. But I don't see a situation where, with all of their constraints and all the limitations that you've got, operating a major carrier, where that would really make sense for them. So I see us becoming a publicly traded company, and I see us, continuing on an independent path.
Our thanks to Alex Wilcox of JSX. We appreciate your time, of course, this Monday morning. We're going to switch gears, get a check-in on these markets here with Bloomberg's Abigail Doolittle.
There's a pretty risk-on tone at this point, Sonali. We are looking at the S&P 500 right now, near session highs, up 0.6%, heading to another record close, potentially the 38th of the year if we do close at these levels or above. We're also close to an intraday high, and much of it has to do with the sense that there's greater certainty around the presidential election after the attempted assassination of the former President Donald Trump. And you can see DJT still up a very healthy 34%, one of the best days since the company started trading on the NASDAQ back in late March. Take a look at the 10-year yield, confirming the risk-on picture. Bonds are not being bid up. And then the peso, it is declining because, of course, Donald Trump not friendly to Mexico in his last term. As for the odds, if we're talking about the polls for the election, in some swing states, it's relatively close. But the betting odds, the predicted odds, very, very wide. In blue, we're looking at President Biden. In red, we're looking at the former president. 68% betting that former President Trump will win. Joe Biden at 26%. Kamala Harris, if she were to replace Joe Biden, as some have speculated, down there at 11%. So the betting odds, the money, is very clearly betting on the former president. As for some of the stocks and the ETFs that are moving on this, well, banks up 1.1% on the idea that there would be less regulation or even deregulation. The energy sector doing very well, but of course, drillers outperforming. Halliburton up 2.2%. On the other hand, solar, green energy, poster child or project of the President Biden, right now down 5.6% overall. And then Centene, that of course is a Medicaid, Medicare stock. Much of their revenue comes from those areas, down 1.3%. Bucking the trends, Katie, of some of the insurers, private insurers, that are higher on, again, the possibility that the former President Donald Trump, that he could win in November.
All right, Bloomberg's Abigail Doolittle, so much. And keeping an eye on stocks here, we're taking a look at Apple shares up 2%. That's good for an intraday record high. That comes after Morgan Stanley named it as their top pick. So there you go. Apple shares up about 2%.
$3.6 trillion.
It's pretty big.
In market cap. Not as big as, maybe Tesla will be someday, if you listen to some.
If you listen to some, of course, Dan Ives, I'm thinking of you.
Kathy Wood.
And Kathy Wood.
Yeah.
Coming up, we're going to talk about the economy under a potential second Trump administration as the Republican Party pitches its agenda at the 2024 RNC. This is Bloomberg.
I see Kamala Harris as the next replacement. I go a step further than that. I think what we're seeing from Nikki Haley and from all the other Democrats in the wings is that they're trying to keep their powder dry for 2028. The waters of 2024 are just way too murky for any next stage Democratic or Republican candidate to wade into right now. And the polling data, while it continues to show Trump and Biden just 1 or 2 points away from each other, which is shocking, 71% of the electorate is not swayed by the debates. We'll see if they were swayed by the assassination attempt.
And that was Henrietta Treyz of Veda Partners speaking to us in the last hour. And it's time now for Wall Street Week, where we're focusing on the market and the economic implications of this election cycle. And for that, we bring in Wall Street Week host David Westin. And David, we were talking a little bit in the break about how political violence in this country has unfortunately become more common in the past decade or so. And now you have the likes of Joe Biden and others trying to take the temperature down.
Yeah, and obviously we can't say it often enough. We cannot normalize this kind of behavior. It is awful, shocking, tragic, and frankly, it's been directed both at Democrats and Republicans, and it's an awful thing to do. So we don't want to act like, oh, well, that just happened. At the same time, it does have real ramifications for the people who watch Bloomberg. And you can see it in the markets. Already it was moving that direction after the debate, that there would be a Trump 2.0, and quite possibly both houses of Congress going Republican. That just seems to have accelerated since that assassination attempt. And he's becoming an icon, frankly, Donald Trump.
Yeah, well, the photo was, gives me goosebumps just to see that unfurl, I should say. In terms of unity, however, I mean, when Trump ran in 2016, lock her up was the big phrase. After Biden came into office, his Department of Justice just started throwing one case after the other at Donald Trump. Is there any chance we really have any kind of unity in the next administration?
Well, any chance is a pretty low bar, right? And
that's what I mean. Is there any chance at all? Like 1 in a million?
Well, I'd love to believe, because I live here, I'm a citizen, I'd love to believe there is any chance. I must say, having experienced some of this in the past, we tend to say we're all going to come together. 9/11 is the most powerful example. After 9/11, we were all united. It was a wonderful feeling, but how long did it last? And typically, people then go back. I hope that's not true. I think the most interesting thing to me at the moment is Joe Biden needed to reposition his campaign, and ironically, he doesn't have any ammunition, so to speak, of repositioning his campaign. It's Donald Trump who's actually repositioning his campaign right now as he brings in Nikki Haley on the first night, and he says he's going to change his speech and make it about unification. Donald Trump moving toward unification is a very interesting, potentially powerful thing.
I really do want to switch gears a little bit more and talk to what you were just hinting at a little earlier, this conviction in the Trump trade you're seeing play out through markets, probably most pronounced when you look at the bond market and the move in the 30-year in particular. What does Trump mean for interest rates in the long term, given you have this fiscal issue as well as expiring tax cuts going into a potential Trump term?
Well, if you've seen, as you say, the re-steepening of the curve suggests, particularly in the long end, that the market thinks it means that rates are going to be higher, that term premiums are going to be higher, that people are going to have to borrow more money as he cuts taxes and he spends more money and he imposes tariffs, which are inherently inflationary, which means that the Fed may well have to raise rates at some point if he goes that way. That's what they say. Now, I will say from the people around Donald Trump, they say, well, wait a second, there's a supply side of this. He's going to free up so much production that it actually will bring prices back down. That is what they would say. That's their position.
Well, it's really interesting how, we've been talking to investors about the election for months, and at least at the index level, it seemed like it went from a non-event to basically now we're all putting together these Trump trade playbooks, and we bring up the bond market. When you speak to investors, of course, is that where their attention is focused on the bond market and, of course, the impact of those potential deficits?
Yeah, absolutely. They are focused on that because that's the first means by which it emanates through the economy. But obviously, the bond market affects the stock market as well. If you have a higher discount rate, if actually essentially what you're doing is taking it all up, it actually can hurt the price of stocks, because particularly some of the tech stocks, those people who are priced basically on the out years rather than the in years, when you raise that discount rate, it really drives down the value of the equities. But to come back to your point, Katie, yeah, when I talk to people, they're talking about overall higher interest rates and tariffs and prices.
When I was a kid, Republicans would always say they wanted to be fiscally conservative. Right? Nobody is fiscally conservative anymore, and we're looking at over $100 billion a month in interest costs alone on this deficit. And yet the bond vigilantes have been nowhere since Clinton.
We haven't seen them, although what people say is you don't see them until they see them, and all of a sudden it really unravels quickly. Again, to say, we want to make really careful to really present both sides of the argument. Scott Bessent, who talks to Donald Trump regularly, what he says is we're going to be fiscally responsible because we're going to get rid of the Inflation Reduction Act, which will save $1 trillion. We're going to reform Medicare, which is going to get rid of $1 trillion in costs. So he thinks they've identified some substantial cost savings. Now, I will say, the first time we had Donald Trump as president, he made some promises like that too, including getting rid of Obamacare, which is going to save $1 trillion. They never got it done. So we'll see if they can actually get it done.
David, there are some more aspects to this Trump trade really taking hold today. Financials up more than 1%, energy up more than 1%, communication services, industrials all up today. How big is the force of potential deregulation in a potential Trump administration?
Well, and you have to couple it, of course, Sonali, with what we saw from the Supreme Court this last term, which is going in the deregulation area. So if you put a Donald Trump 2.0 in the White House together with where the Supreme Court's taking it and the challenges in the courts, you really could have substantial deregulation, which obviously a lot of people that we deal with and talk with would be happy about, particularly when it comes to things like mergers and acquisitions and some of the environmental investment, things like that. They would like that. And as you mentioned, energy, I mean, deregulation, particularly on the pipelines and really, what is it, drill, baby, drill, is that what they say? That would be pretty good news, I suspect, for a lot of energy companies.
They might be screaming it actually right now,
Yeah,
David.
but that could be right. That could be right.
David Westin, thanks very much. David Westin, of course, is the anchor of Wall Street Week. Bloomberg Television and radio is going to have special coverage on the ground in Milwaukee for the Republican National Convention. Watch that all week starting at noon Eastern. This is Bloomberg. Let me just give you the trading diary, what you need to be watching this week. Bloomberg has special coverage on the ground in Milwaukee for the Republican National Convention, so definitely catch that starting at noon. Fed Chair Powell is going to be speaking at noon as well to Bloomberg's David Rubenstein. You'll be able to see that on the terminal TLIV Go. Bank earnings continue tomorrow with Morgan Stanley and Bank America reporting after Goldman Sachs today. And then U.S. retail sales are also due out tomorrow, so watch EcoGo on your terminal. Thursday, we're going to get the ECB decision. We'll bring you Christine Lagarde live. And we just heard from Fox News that Donald Trump is going to make his VP announcement today, which I think is really fascinating.
Yeah, within hours, of course, according to Fox News, Trump giving that interview there. And this comes after, of course, the events of this weekend, which were tragic. But it was really interesting to see how swiftly you saw some of the big billionaires come out to officially endorse Trump, Elon Musk, Bill Ackman among them. And a lot of this, of course, playing out on X, formerly known as Twitter.
Yeah, of course. There's a lot of people in the financial industry and technology industry, of course, going out to now more formally endorse Trump. I would say I would also keep an eye out for some of the recent meetings that certain billionaires have had. For example, Ken Griffin recently met with Donald Trump, has not come out and formally endorsed him yet. So there are a lot of people still in the wings. And you have to wonder how much a VP pick changes the game.
Well, to that point, I mean, again, a lot of this is playing out on social media. Musk actually replied to a tweet that said that U.S. Senator J.D. Vance should be Trump's vice president pick, and Musk said, "You're right." So, of course, we're awaiting that pick. We're expected to get it within hours, and it'll be fascinating to see whether that sways things when it comes to some of that support.
Of course, J.D. Vance on Twitter blaming Biden directly for the assassination attempt, and maybe that's why Elon Musk loves the engagement that J.D. Vance gives him. Let's talk for a moment about bank earnings, because we had on Friday a very bad day for banks, right? With J.P. Morgan and Wells Fargo reporting. Wells Fargo took a big hit. Today is a good day for banks. I guess Goldman Sachs shares doing well after they said profit went well, even though they slipped behind JPM in terms of the advisory business. is this all about rising tide, or, how's tomorrow going to play out?
It's interesting. Tomorrow's Bank of America, of course, another look on the rate story. Of course, a little more updates from Goldman's call still going on. Goldman saying that the Fed has a solid rationale for a July rate cut. And so, of course, interestingly here, curve steepeners, guys, beautiful for the banks. Goldman and JP Morgan both hitting intraday highs today. Of course, Goldman moderating after saying that it may moderate its pace of share buybacks.
How long has this call been going on? Didn't they start at 9:30? They're still at it?
Listen, there are things to talk about, right?
That's true. That's true. That's almost as long as we've been on air. But there you have it. Now we're at, of course, the Fed prediction part of the call. So maybe it's wrapping up soon.
Which will be very interesting because Jan Hatzius, their chief economist, has said the Fed could raise rates 5 times if Donald Trump wins the election.
Yeah, a lot of uncertainty. Let's see how they all answer to what happens next, particularly for the businesses keeping them running hot, Katie.
All right, coming up on Bloomberg TV, Tom Siebel. He is C3 AI CEO. He joins Bloomberg Technology next. But that does it for Bloomberg Open Interest. This is Bloomberg.